Are you ready to ride the electric vehicle wave and explore the soaring opportunities in the EV sector? Today, we've got some exciting news about Lucid Motors and their recent surge in stock price. But before we dive in, make sure to smash that like button and hit subscribe to stay updated on all things market related. Let's rev up those engines and see how Lucid is riding the green revolution to new heights. The opening price was $7.06, and by the closing bell, it reached an impressive $7.47, marking an 8.42% increase in just one day. The stock's daily high soared to $7.54, while the daily low dipped to $6.99, creating a range of 7.79%. Now, let's take a closer look at how these price levels interacted with the resistance and support levels we discussed yesterday. The stock encountered the first level of resistance at $7.27, but it didn't seem to hold back the upward momentum. Instead, it surged past it, surpassing the next resistance level at $7.65 as well. The bulls were relentless as they pushed the stock price even higher, eventually reaching the third resistance level at $7.85. On the flip side, the stock found strong support at $6.69, bouncing back from the daily low of $6.99. It managed to stay above the $6.49 support level, which provided a solid foundation during intraday fluctuations. One noteworthy aspect of the day was the impressive daily volume of 68,241,072 shares traded. This was significantly higher than the average daily volume of 59,209,318 shares, indicating heightened interest and activity in the stock. Such an increase in volume often suggests strong market participation and potential further price movement. The 7.79% range showcased the stock's intraday volatility, offering traders ample opportunities to capitalize on price swings throughout the day. Overall, it was an eventful day for Lucid stock, with the bulls taking charge and breaking through multiple resistance levels. The robust daily volume and range added excitement to the market, making it a day worth keeping an eye on for traders and investors alike. The electric vehicle, EV, market has been experiencing a remarkable surge, and it's crucial for investors to understand the broader implications of this trend. According to the International Energy Agency's IEA Global Electric Vehicle Outlook, global sales of electric cars are on track to hit a record high this year, with expectations of a 35% surge compared to the previous year. This impressive growth indicates a rapid transformation of the automotive industry, with EVs becoming a driving force in the emerging global energy economy. As EVs become more prevalent, they are poised to disrupt the long-standing dominance of internal combustion engine vehicles, challenging the status quo and presenting significant implications for the energy sector, particularly oil. The rise of electric cars has been nothing short of remarkable. In 2022 alone, more than 10 million electric cars were sold worldwide, and the trend shows no signs of slowing down. The IEA projects that sales will continue to climb, reaching an estimated 14 million units this year. As a result of this explosive growth, electric cars are set to increase their share of the overall car market from around 4% in 2020 to a remarkable 14% in 2022. The projection for this year suggests a further increase to 18%, showcasing the accelerating shift towards sustainable transportation. Key markets driving the electric car revolution include China, Europe, and the United States. Among these, China stands as the clear frontrunner, accounting for 60% of global electric car sales in 2022. Notably, more than half of all electric cars on the road worldwide are currently found in China. Europe and the United States are also witnessing robust growth in EV adoption, with sales increasing by 15% and 55% respectively in 2022. Ambitious policy programs, such as the Fit for 55 package in the EU and the Inflation Reduction Act in the US, are expected to further bolster the market share of electric vehicles in the years to come. By 2030, the average share of electric cars in total sales across these regions is projected to rise to around 60%. The electrification of the automotive industry is not only reshaping consumer preferences but also presenting opportunities and challenges across the entire supply chain. One notable area experiencing positive knock-on effects is battery production. Announced battery manufacturing projects are on track to meet the increasing demand for electric vehicles, as demonstrated in the IEA's net zero emissions by 2050 scenario. However, the battery manufacturing landscape remains highly concentrated, with China leading the charge and dominating battery and component trade. Last year, China's share of global electric car exports surpassed 35%. Recognizing the importance of domestic industries and supply chains, major economies are implementing policies to strengthen their position in the EV market. For instance, the EU's Net Zero Industry Act aims for nearly 90% of annual battery demand to be met by domestic battery manufacturers. Similarly, the US Inflation Reduction Act focuses on enhancing domestic supply chains for EVs, batteries, and minerals. As a testament to the growing significance of this sector, investments totaling at least $52 billion have been announced in EV supply chains in North America since the passing of the Inflation Reduction Act. Despite the concentration of electric car sales and manufacturing in a few big markets, there are promising signs of growth in other regions. India and Indonesia, in particular, have experienced substantial increases in electric car sales. While they may still be from a low base, the growing popularity of electric vehicles in these countries offers potential for further expansion. Policymakers in India have introduced a $3.2 billion incentive program that has attracted investments worth $8.3 billion, setting the stage for increased battery manufacturing and EV rollout in the coming years. In emerging and developing economies, the most dynamic area of electric mobility is 2- or 3-wheel vehicles, which significantly outnumber cars. These smaller electric vehicles offer an affordable and sustainable means of transportation and are essential in supporting sustainable development goals. The global shift toward electric vehicles has far-reaching implications, and it is essential for investors in the EV industry, like Lucid, to keep a close eye on these trends. As the market continues to evolve, investors need to carefully assess the potential impacts on companies' growth, supply chains, and market share. Understanding the broader dynamics of the EV market is crucial in making informed investment decisions and navigating the changing landscape of the automotive industry. Alright, let's analyze the upcoming resistance and support levels for Lucid stock on July 31, 2023. Understanding these key price levels is crucial for investors as they can offer valuable insights into how the stock price might behave in the coming trading sessions. First, let's take a look at the upcoming levels of resistance: $7.68, $7.89, and $8.23. These resistance levels indicate price points where the stock has historically faced selling pressure, preventing it from rising further. If the stock approaches these resistance levels and breaks through them with significant trading volume and holds above them, it can be seen as a bullish signal. Breaking through a resistance level could indicate increased buying interest and potentially propel the stock price higher. For instance, if Lucid stock manages to break above the first resistance level at $7.68 and sustains its position above that level, it may encounter increased buying momentum. This could potentially lead the stock to shoot up towards the next resistance level at $7.89. If the positive sentiment persists, and the stock maintains its strength, it might even target the third resistance level at $8.23. On the other hand, let's examine the upcoming levels of support: $7.12, $6.78, and $6.57. Support levels represent price points where the stock has historically found buying interest, preventing it from declining further. If the stock approaches these support levels and bounces off them with significant trading volume, it can be interpreted as a bullish signal as well. For example, if Lucid stock experiences a temporary dip and finds support at the first level at $7.12, it may indicate that investors are willing to buy the stock at that price, supporting its upward movement. If the stock holds above this support level, it could potentially reverse its course and aim for the second support level at $6.78. A strong rebound from there might even lead the stock towards the third support level at $6.57. It's important to keep in mind that technical analysis, such as studying support and resistance levels, is just one tool in the arsenal of investors. Market conditions, news events, and broader industry trends can also influence the stock's price action. As always, it's essential to conduct thorough research and consider multiple factors when making investment decisions. With the upcoming resistance and support levels in mind, investors can better assess potential entry and exit points and manage their risk accordingly. As we approach the trading session on July 29, 2023, keep a close eye on how Lucid stock interacts with these critical levels, as it may offer valuable clues about its short-term price trajectory. And that's a wrap for today's analysis of Lucid Motors. We've explored the stock's price action, analyzed the latest news, and discussed the upcoming resistance and support levels to keep an eye on. Remember, investing in the stock market involves risks, and it's essential to do your own research before making any decisions. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates on Lucid and other exciting market insights. Feel free to leave any comments or questions below. We love hearing from you. As always, thank you for joining us, and we'll see you next time. Happy investing!